and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. And today onto the Buy Now, Sell Now lens, we're going to be focusing on the IT space. But before that, let's have a look at what the markets are up to. So Cheryl, the market trend continues to be upwards, but what a comeback made by Bank Nifty especially.
Absolutely. A very good morning to you, Shrishti. And let's not lose sight of what even IT companies are doing. They've also recovered very sharply from the day's lowest point, be it TCS, be it HCL Tech. Both of them are reacting to their earnings. And look at HCL Tech right now at the day's highest point. This after actually seeing a sharp cut in the initial tick-off trade. So yes, HCL Tech definitely right now at the day's highest point. So is TCS, so is Infosys. Infosys is at a 3-month high. Wipro is going to be announcing its earnings today. So Wipro is another counter to watch out for in trade. Take a look at what LTIMindtree is doing, because that one has entered into the Nifty today. It has replaced HDFC. So yes, LTIMindtree also holding on to good gains at this point in time. Now, let's not forget the fact that the benchmark indices once again hit a fresh record high levels in today's trading session. Both Nifty as well as Sensex, and Sensex topped 66,000 for the first time ever. So yes, that's the way how the markets are at this point in time. Let's take a look at some other set of gainers then. You have Hindalco, that is the top gainer on the Nifty. You have HDFC Life, SBI Life as well. They're holding on to good gains. Add to the list Tech Mahindra also. That's seeing good strength in today's trading session. But on the flip side, you have Power Grid that's losing about 2%. Coal India is down about 1.1%. Apollo Hospitals, UPL, Maruti Suzuki are the other set of losers. So let's take a look at what the sectoral indices are doing then. In sectoral indices front is the power and the energy index that are declining in trade, but it's IT index that's bucking the trend, 2.5%. It is at the top performer on the sectoral front. You have metal index that's up 1%. So is realty index up about 1% or so. So that's the way how the markets are looking like at this point in time. But IT, that is definitely going to be on the spotlight on the BNSN lens, isn't it, Shrishti?
Well, yes, absolutely, because what a comeback in the Nifty IT index, that's up about 2.5%, and the results were not that surprising on the positive front, because if you look at TCS numbers, then that kick-started the earnings season with the numbers largely in line, but a big disappointment coming in from the HCL Tech numbers. But now you see the stock is at the day's highest point. But in focus will be Wipro too, as the company is expected to report its Q1 earnings today. And let's go across to my colleague Anisha, who tracks the IT sector, who is joining us with the number crunching for all these IT players. Anisha, over to you. What was the silver lining amongst the earnings that we are seeing such a sharp rebound?
Even I am looking for that silver lining. I can't find any. The only silver lining, if you're asking me and putting me under the spot, it would be the fact that the street is banking on that the worst is perhaps over. Though the companies are non-committal, even in my conversation with TCS, they're not very, clearly talking about a recovery in H2. They're hopeful about it, but not willing to give a timeline. So maybe the stocks are pricing in that there is some sort of recovery that should be underway, and this is going to be perhaps the worst that the IT companies have seen. And I hope it is actually the worst for HCL Tech, because as you pointed out, the performance was really dismal. How they're going to maintain the guidance is a big question that the street is asking. But nonetheless, the stock is holding up as of now. But the other stock in focus is also Wipro, as you pointed out. It will come out with its earnings later today post-markets, hopefully around 4 p.m. The expectation is fairly muted, because if you look at the Q1 guidance itself, they had alerted about a decline of anywhere between 1 to 3%. Street is working with that. The actual number will be a cut of anywhere between 2 to 3% on the top line itself. And given that the top line itself will be weak, that will percolate to the margin level as well. So sub 16% is what we are expecting. Profitability too will decline on a sequential basis. I think the number was closer to around 3,040 crore thereabouts that the poll was throwing up. For Wipro, of course, the key thing to watch out for going forward will be the Q2 guidance. The expectation is they'll guide for a -1 to +1 kind of range. But do remember, this is coming at a very, very low base, because Q4 was bad and Q1 there is a decline, and after that as well there's a possibility of a decline. So that's the take as far as Wipro is concerned. The commentary will be fairly important, what they're doing with respect to headcounts, because of late there has been quite a bit of negative commentary regarding the headcount trends in Wipro. So all of those things will be keenly watched.
Thank you so much for that, Anisha. And let's ask our experts what's that silver lining that they are spotting in the earnings for HCL Tech as well as TCS. So let's bring on board our guest for today. We have Kunal Bothra, who's joining us on the technical front, while Sneha Poddar is joining us on the fundamental side. Very good morning to you, Kunal, as well as Sneha. Thank you so much for joining us on ET Now. And Sneha, let me first come to you. Yes, HCL Tech numbers did disappoint a tad bit. Is the fact that they maintained that guidance. You have a lot of analysts saying it's a tall ask, but look at what the stock is doing. It has recovered from day's lowest point. You have TCS that is actually soaring in trade, Infosys, Wipro, all the IT companies are actually seeing a strong strength today in today's trading session. So do you think that the bottom has already been made and now only things will get better for these IT companies? Everything is priced in?
Okay, very good morning. Basically, it seems that the market is already pricing in all these discomforts that is being thrown by the IT companies. But in terms of recovery, earlier we were expecting the recovery to kick in from the second half of FY24. But now, given the kind of outlook which is being given by the management and the kind of deal wins and the deal pipeline that they have, it seems that the recovery would start from FY25 rather than from the second half of FY24. So it would be a very gradual kind of recovery, and that should take in from FY25. But yes, the valuations are very comfortable, and it's actually a good time to start accumulating. So that's why the market has not reacted very negatively to the poor numbers reported by the companies. And in case of TCS, if you would see, the silver lining was the deal win. The deal win was pretty good for the company, and that was a positive thing that emerged in case of TCS. While in case of HCL Tech, the guidance that they have maintained, that gives us some confidence with regards to not much of downside is there from here onwards.
Okay, so that's the fundamental take coming in on all the IT companies and the companies that have already declared the numbers. But Kunal, coming to you, because as they say that the price tells you the story before the news kicks in, and now that Sneha is highlighting that recovery is on the cards, but it could take some time. But what are the prices telling you with the strong sort of a rebound that we are seeing? Will you be a buyer in any of the IT names right now?
Good morning, everyone. My sense is that the markets were actually waiting out for the results to start to trickle into these IT names for them to establish that whether this is a case of a strong buy, whether the worst could be behind, or how much quarter of pain could be left into these IT names. I think after the results of TCS as well as HCL Tech, I think one thing seems to be certain, that the markets are not extremely bearish on the IT stocks like what they were a few quarters back or a few months back. So that change of stance itself is one of the major reasons why you're seeing a positive price action for many of these IT names. Now, what matters is if, for example, if Infosys also delivers results in a very similar line, if Wipro also delivers results in a very similar kind of a line, then I believe that the confidence would start to increase significantly for the IT large cap names specifically. So one has to start taking notice of these large cap IT stocks. I think a buy on current levels could be a good strategy for these IT names. In fact, we've been advising a buy for these large cap IT stocks over the last 2 to 3 weeks, specifically the start of July expiry, because my sense is that the last 1.5 odd year, we've already seen these IT stocks going through a massive correction, both in terms of price as well as time. So I believe this could be a good time where one could look to start accumulating, provided traders or the ones who are buying have a longer term time frame of at least 1 to 2 years, if not more.
So that's the technical take coming in on the IT space. At least the market is not very bearish on all these IT names, and one could be a buyer in the long term. So that's the take coming in on all these IT counters. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name, the stock name that you're looking to invest in. If you're already invested in a particular stock, then do mention the buy price as well as the quantity and the time horizon that you're looking to hold a particular counter, because in that way our experts will be able to help you better. A keynote one is that we will not be able to answer your call. So if in case you're trying to reach us on the WhatsApp number through WhatsApp call or even normal call, we will not be able to answer your call. So we will be only able to read your messages and get you answers for that. So let me kickstart the query segment with the first query that I have in front of me. And this one is coming from Pratmesh from Mumbai. And Kunal, this query is actually for you. He wants to know whether Infosys can be bought at current price for a period of 6 months. We did speak at length about the IT companies right at the start of the show. You did say that you can look at buying into these counters on dips, or you can start looking to accumulate these counters. But what's your take on Infosys?
Well, I would be bullish on the IT names, and as I mentioned, that if you have a longer term time horizon, and if you're okay adding to these IT names at a point where these stocks are at the cusp of negative news or expectations, etc., going around, then it makes a lot of sense to buy these stocks, and especially the large cap names. And time and again over the last 2 decades and more, these stocks have proven their mettle to try and make a strong comeback every now and then. And so I think in that regards, I don't see any major hindrance to the stock price trends over the medium to long term. So the only concern is that whether you can extend your time horizon from 6 months to at least 1 to 2 years, if not more. If that can be done, then I think it makes sense to buy the stock.
Okay, moving on. And Kunal, once again coming to you because this question is specifically for you. One of your fans, whose name is Atul from Pune, has asked you that he is holding 300 shares of Marksans Pharma from a price of 37 rupees. The stock is sitting at its all-time high levels, and yesterday itself it was up like 9 to 10% on the back of a news flow. So what to do in this particular counter? Should he stay invested? And other name he has is he wants to know that whether he could enter Birlasoft within 9 to 12 months investment horizon.
In fact, I started off with Birlasoft because that's a stock which looks extremely attractive to me. In fact, I mean, again, over the last, I think 2 or 3 weeks specifically, we mentioned that Birlasoft is a classic mid-cap IT name. I think it's still not late to buy the stock. Looking at the way the medium-term charts are poised for Birlasoft. So I think that's a stock which you can consider buying. Keep some powder dry in case if the stock gets into that habitual correction of a 5 to 10%, so a 20-30 pointer kind of a correction, then I think you can look to add on further for Birlasoft. For Marksans Pharma, on the other hand, this could be an interesting name. Now, I don't track the stock on a regular basis, but I was just looking at the charts for the stock price, a multi-week, multi-month high, in fact, a multi-year high for Marksans Pharma, which has come along in this leg of rally for the stock price. Looks as an attractive chart. I think right now the indicators are not yet overbought for Marksans Pharma. So I would continue to advise to hold on to the stock, but then keep on monitoring the trends. Because in case if the RSI gets back into a deep overbought territory, that could actually be a good time to book out profits. As of now, you can trail your stop losses and ride the trend along.
All right, this next one that is coming in from a viewer who's writing to us for the first time. Let me try and see. Sanket Shah has written to us, and he's holding 60 shares of Paras Defense. He got this as an IPO allotment, Sneha. He wants to know whether he should stay put with this, hold this one for a long term, or should he look to switch out of Paras and look at other names altogether?
Yeah, he can hold on to Paris. I mean, depending upon what proportion of his portfolio Paris is. So normally 5% kind of exposure can be given to this company. It's a good small cap defense company, and given the kind of traction that we're seeing in this space, this is a good bet to hold on to.
Okay, so that's the view coming in on the counter. But moving on to the next question then. And Kunal, this question is on Hindalco. His name is Vinay and he is holding 500 shares of Hindalco from a price of 380 rupees. Wants to know any target that he can look forward to for the next 12 to 24 months.
So, I think on the short-term charts, the stock has given a cup and handle kind of a breakout. It's an interesting chart pattern breakout for Hindalco. Say with a 3 month time frame, I would look out for 468 to 475 as a target for Hindalco. But I think if you're looking at it from a 12 to 24-month play, then the stock should be able to surpass the previous highs of 500 approximately. So I think it's a good time to buy the stock. The short-term triggers are coming back in line for the stock price. Ride the trend along and possibly look out for targets of 500 plus with a 12 to 24-month kind of a time horizon.
Right, this next query we've got from a viewer who has been continuously reposting to us. So let me take her query. This and she's not mentioned her name. Zensar Tech and Zentech are the two counters. She wants advice on both of them. She's saying both are on an uptrend, especially Zentech is trading at an all-time high for the last two sessions. Can she look to enter afresh for the short term right now, Kunal? And if yes, so what sort of levels are you seeing on these counters going ahead? And also, are they good long-term bets is what she's asking.
Zentek, I would advise to if you're already holding that, I think it's a good time to book out profits actually, because in the last 3 days the stock has run up some 50%. I think from 400 to 650, the stock, which I think 650 plus is the high for the stock today. So it's run up exceedingly high. Indicators are overbought. So anytime over the very near term, you may see a immediate cool off coming into the stock price. So that's a stock which I would advise, in fact, that you can look to book out profits. In case you're looking to buy back, then maybe that 400-ish territory could actually be a good zone to buy back the stock as and when the stock corrects back to those levels. For Zensar on the other hand, this actually could be a good breakout. Again, a classical performing stock over the last 3 or 4 months. The stock was one of the few mid-cap IT names which managed to lead the charge from the front and then move up higher significantly. I would still be bullish on Zensar even from current levels, and that's a stock which I would advise to hold.
Moving on to the next one then, and Sneha, what's your view on a couple of metal counters, that is GMDC as well as NMDC? The viewer named Padma wants to know that can she buy any of these names with a 1-year time horizon?
Okay, GMDC, I don't have any view. With regards to NMDC, she can definitely hold on to it because the company is planning to double its capacity, and that should actually drive growth for the company because overall the demand is pretty robust, especially in the domestic market. And with the China stimulus expected, the overall metal demand is expected to revive, and even prices are expected to surge in the global market. So NMDC is one counter which she can definitely hold on to, or if she's planning to add, she can definitely do that.
All right, this next one is coming in from Thomas George. He's writing to us from Kochi, Kunal, or rather, actually, Sneha, I'll come to you only for this because he wants a long term prospect, but his long term is 1 to 2 years for Sula Wines as well as Medanta, that is Global Health. He has 100 shares of both the companies. He purchased both of them about 2 weeks ago. For Sula, the buy price was around 438, while for Medanta, it was about 654 rupees per share. He wants to know what should he do, stay put with these companies, hold on for the longer term, or should he look to exit and enter some other stock altogether?
He can definitely hold on to these both names. Sola has been since listing, it has been continuously reporting a good set of numbers. Even the recent business update that was that was posted by Sola, so that came in pretty strong. So that's one counter where you can definitely hold on. Probably, if he had bought it during the IPO times, he can do some profit booking partially, but it's a good long term bet. And in case of Medanta, the hospital segment has doing really well. And if we look at the company's growth plans and the kind of the cost efficiency measures that the company has implemented, so its numbers are pretty decent, and the prospects are good for the company. So hold for a long term.
Okay, moving on, and the next question is from Biswajit from Bangalore and Kunal. He wants to invest rupees 5 lakhs with a time horizon of 3 to 5 years. Just wanted to know that any of the stocks that where he could make this allocation and invest this money, he's expecting almost a 3x return in 3 to 5 years time. So I'm not sure whether you can comment on that, but any of your top favorites at this point.
3x is a difficult kind of a proposition, but I think it depends on a lot of things: your profile, your age, your your risk tolerance, etc. Because to get returns of 3x, you have to be ready for getting into a zone where the stock may even go into a correction of 30 to 40% as well, because that kind of return generally gets achieved in terms of extremely high risk bets. So I would not recommend that. So I think I'll stick to the larger cap names. I would still believe that HDFC Bank at current levels is a classical buy. I think the stock has come back towards a major support on the long term basis. So I believe that hopefully with the merger out of the way, the stock should see a very strong up move going forward. And I'm talking of it from the long term play. Even Reliance Industries, I think, is a classical buy. The stock has just started to come out of a deep consolidation, which has lasted for more than 1.5 to 2 years, which means that the prospect for the next 1 to 2 years at least should be extremely bright for Reliance Industries. You can look out for a few mid cap names, and I think time and again I've been highlighting a few mid cap stocks from the PSU banking pack. That's one sector which I believe you can look to maybe go for some sort of allocation. The likes of PNB, Canara Bank, these are classical stocks, which you can look to trade. So many options available. But then, as I said, that some factors like your risk tolerance, age, etc., could be a major parameter where we look to focus on.
All right, the next query that I have is coming in from Francis. He's writing to us from Trishul, Kerala. And 300 shares of Aster DM is what he has at a price of 190 rupees per share. Is it worth holding, Kunal?
Well, Aster DM has been a stock which I think, if I'm not wrong, has been into a correction in the last 1 or 2 weeks. Now, I'm not sure that whether you're looking at it from a long-term play or a short-term play, but from a short-term wise, the charts and the RSIs, etc., they are indicating some sort of a cool-off which could happen. My belief is that the stock should ideally come back towards 280 to 85. So, as I said, I'm not sure of your time frame, but if it's more to do with a short term, then I think it's a good time to try and book out profits and look to buy back again closer to 280.
Okay, moving on. And Kunal, once again, a query for you. This query is from Hemant, and he wants to know the technical view on Prestige Estate. The stock is facing a knockdown in today's trading session, although the company did come up with its Q1 updates. So, where do you feel that this selling will cool off, and what's your take? He's holding 25 shares from a price of 480 rupees.
So first things first, I think after such a kind of a cool off into the stock price, one thing is certain that the stock would get into a corrective phase further. Now, you look at the last 2 weeks of charts, I think 600 has been a very strong supply zone for Prestige Estates, which means that the market participants were actually anticipating that that 600 could be a zone where it's a good zone to book out profits as well as the stock getting into a top out formation. Now, ideally in such kind of a scenario, the stock should get into a further leg of correction. So what you're seeing right now could be a point where the stock may correct by at least another 6 to 8% further from current levels and maybe come back towards 480, 470 mark. So it's a good time to try and book out profits, even if the stock is down some 5-6% today, and look to buy back if it corrects back to that 470, 480 mark.
All right, this next query that we have is coming in from Nishant, and Nishant is asking about Policy Bazaar. 150 shares, he bought it at 1400 rupees per share. This is pre-IPO time apparently, and also now if you look at the stock price, it is half from those levels. He wants to know whether he should sell or wait for the stock to bounce back, and is it worth holding is what he wants to know. What's your take on this, Sneha? He's actually lost quite a lot of money. 0.5% at least a wealth erosion coming in for this one, more than half actually. What should he do?
Okay, Policy Bazaar, definitely since IPO time it has halved, but then if you see in recent past 1 to 2 months, the stock has started performing. Basically, these companies have started seeing some sort of traction, and if you listen to the management commentaries, they are quite positive of turning EBITDA positive by FY25. We believe that these newish tech companies, they are high risk high reward play, and if you're ready to take that risk, I think the investor can hold on to it, give it some time, and if the company are able to turn around their business into a profitable model, then it can turn out to be a good multi-bagger. So one has to take a calculated risk. It really depends upon the risk profile that the investor has.
What's your take on Delta Corp? Mohit is wants to know that can he invest in this particular counter for 2 years time horizon, and that generally happens that after such a sharp fall, investors look that maybe the expected rebound could help them gain some profit. So what's your outlook on this?
Well, I would suggest to stay away or refrain from buying such kind of a name. So look at it this way that 2 years back, I think 2021, say in September, October, what was the stock price? The stock price was almost at I think 170, 175 levels. And what has happened in the last 2 years, the stock has come back towards that 180, 183 mark, which means on a 2 year basis, the stock in the last 2 years has given flattest returns. Now, the concern for the stock has resurfaced in the last, I think, 1.5 odd year. The previous year, I think I remember in 2022, the stock had fallen very sharply from 330 to 160, 65 levels. And right now as well, the stock has corrected from 240 to 45 towards 180 mark. So those two phases of sharp correction could dent the prospects for the stock at least for the next 3 to 4 quarters. So I think you should be very patient if you're looking to buy the stock, not to invest at current levels, wait out for the next 2 quarters at least. And then I think could probably be a good proposition to buy the stock, even if it's down, maybe 10, 15% further from current levels or 10, 15% higher from current levels.
Okay, this one is coming from Ramki from Delhi, and this one is for you, Kunal. Root Mobile 1,215 is the buy price. He's actually seeing a good set of profits in this particular counter. What should he do for the longer term? And also, he wants to know what is the general rule for booking profits.
Of rules for booking profits. The happier and the contented you are looking at the profit number, the better it is to book out that number. Or else, the classical way which we tend to follow is that when you are in the money by a margin of, say, in this case, 50% or more, because if your buy price is 1,000 approximately and the stock is at 1,600 plus mark, then it makes sense to trail your stop losses by a margin of 10% at least. So, what you can do is from current levels, you can keep a trading stop loss of 1,500 and then continue to ride the trend on the upside for Root Mobile.
Okay, Sneha, what's your view on BLS International? KB Rao wants to know that is this a good time to invest in this counter?
Okay, BLS International has actually run up a lot, so I would suggest to let the stock price cool down a little and then probably enter this counter. It's expected to do well with the kind of buoyancy that we're seeing in the travel industry, but then the stock price is way ahead of the fundamentals.
This one is coming on Suzlon actually. Angat from Mumbai has purchased Suzlon at a price of 17.99 rupees per share. Kunal, he has 2,500 rupees, rather 2,500 shares of this particular counter. What should he do? Because currently, if you look at the stock price performance of Suzlon, this buy seems to be at an elevated price.
Yeah, and I think it makes sense to exit the stock. I'm not sure of what's the time horizon, the rationale, etc., for you to buy the stock, but then it always makes sense to exit these stocks because over the last many years, not just 1 or 2 years, the stock has been a disappointing play. So I think I would suggest an exit on Suzlon and make sense to switch towards other quality names.
Okay, so that's the view on Suzlon. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back. You're watching Buy Now, Sell Now on ET Now, and the show is where you get answers for all your stock-related queries. And getting back to the same, Kunal, the next question is for you. The question is from Prashad, and he's a senior citizen, and what he's saying that he's been holding Polycab since the IPO, and he is holding 27 shares as of now. He was allotted these shares through the IPO, and look at the move. The maximum sort of a gain that I'm seeing is 492% since the listing. So at this particular point in time, when the stock is at an all-time high, what should he do?
Well, I think congratulations, first of all, to the viewer for holding on to such a quality name and for such a long time. I think you've just reaped the rewards of patience in this stock. So congratulations to you. Now at 3,800 odd levels, I would still believe that Polycab is a stock which is now becoming more of a compounding story from a medium to long term play. Now the chart history for the stock is restricted towards just the last 3 or 4 years. So what you can probably extrapolate is for the next 1 or 2 years that this uptrend would continue for the stock price. I would probably expect that this trend would continue for Polycab. Maybe a 4,200, 4,400 could be a nominal target which you can keep for the next 1 year or so for the stock price. But I think riding the trend is much more better rather than looking to book out profits because you would need to have a better alternative which could be such a kind of a compounder going forward.
Okay, so that's the outlook on Polycaps. This stock just got listed in 2019, and what a stellar gains the counter has showed. And congratulations to you as well. But moving on, and Kunal, once again, a query for you is from Raja, and he wants to know for the medium term, can he look to buy SRF?
Well, SRF is a very tricky stock now. Unless you have a very high risk kind of appetite, only then it makes sense to buy the stock. It's come back towards a very strong support level. But SRF, Naveen, Fluorine, etc., these stocks are going through their own patch of correction, consolidation, lot of news flow for the entire chemical sector. So I would probably be a bit wary into buying the stock. You can look to buy, but as I said, that keep your position sizing a lot more lesser. So that's the best way in which you can tweak in case if you're buying a stock at a heat of negative news flow or at a point when there is a lot of high risk attached towards the stock price. So you can consider buying the stock at current levels, but keep your position sizing a lot more lower than a normal position sizing which you would generally take.
One is coming from Akash, and this one is for you, Sneha. He's looking to add some good quality small cap stocks in his portfolio, and the ones that he is actually outlined is Patel Engineering, Moschip Tech, and Balu Forge. Do you think that these are good companies to be invested in the small cap space for the next 3 to 5 years, or should he look at better quality names in that particular area?
I would suggest to look at better quality names. I would recommend from banking space, probably he can look at IDFC first. From the auto space, he can look at CI Automotive. And if we among the hotel space, he can look at Lemon Tree. So these are three names I would recommend to add from the small cap space.
Okay, moving on to the next question. And Sneha, Kasi is a senior citizen from Tamil Nadu and wants to know the advice on five-star business. What are the medium-term prospects on this particular name? He's already holding 50 shares. He didn't share his buy price, but just want to know that can he add more at this particular counter and what's the outlook going ahead?
Okay, Five Star is a good business model. The company is present in the small finance space, and overall that space is doing good. So he can take a small exposure to this. One of the good companies in this space, I would suggest is Equitas or Ujjivan. But then even Five Star is doing pretty well, and he can definitely look to add.
All right, this one is coming in from Sagar. He wants a technical view on Tube Investments. Kunal, he's been holding about 4,800 shares from the COVID lows of about 300 rupees per share. Where do you see the target for this one, 4,000 plus in near term, and what a spectacular return?
Yeah, I think it's done reasonably well for itself, Tube Investments. Now, very difficult to comprehend that where the stock could probably go from current levels, but I think you can continue to hold on. The indicators are not yet into an overbought territory, even after such a steep run for the stock price. So all I can sense is that you can continue to hold on to the stock for as of now.
Wants to know short-term view on three counters: Moltec Packaging, Tarsan Products, and Aarti Industries. He's looking for a new investments for 2 to 3 months time horizon. His name is Dhananjay.
So for Moltec Packaging, I think it's a good time to book out profits over here because the stock seems to be coming back at 1090, 1100 levels into some sort of an overbought territory. So I would suggest to book out profits in case if you've already bought. If you're looking to buy, then wait for a correction. Aarti Industries could be a bit tricky. The stock has gone through a very sharp selling. Now, in fact, I was actually looking at a couple of indicators for Aarti Industries, and the indicators have come back into an oversold territory. But then what we can best expect is more of a relief rally. If you're playing for a bounce, only then it makes sense to buy the stock. Otherwise, because it's a high risk situation, I would suggest to avoid the stock. Tarsans could be an interesting play. Now the history or the price history is limited for Tarsans, but I think at 630 odd levels could be an interesting bet for potential target of 675 to 680, even if it's from a short term play.
This one is from Padmaseva Rao writing to us from Bangalore, and this one is for you, Sneha. Can he look to buy Mishra Dhatu at current price, that is Midhani?
Midhani per se, I don't have a view, but in the defense space, we are actually preferring BEL, which is a very well diversified player and is present in almost all the segments of defense. So this is a good bet from a long-term perspective, given its diversified presence and given the strong order book that it has. So it provides good visibility. But he can, the overall defense space is doing good. So probably he can also accumulate Mishra Dhatu. But personally, I don't have a view on the company.
Okay, Sneha, what's your outlook on Berger Paints? KUR is holding 150 shares from a price of 760 rupees. Wants to know, since he's at a loss, so should he average at this point in time, and what's the view for the next 2 years? Given the competition that is building up in this particular space, do you believe that Berger Paints can give return as an investor?
I would suggest to exit Berger Paints because the competition has actually heated up a lot. If he really wants to play the paint industry, then Asian Paints is the largest player that is present in this space, and he should play through Asian Paints only. He cannot expect a kind of alpha creation from these counters because the kind of heated competition which is there. So always a pricing pressure would be seen in this industry. So probably the kind of earlier strong growth that we used to see for these companies, that might cool off for next few years at least.
This one is coming specifically for you. It's coming in from Vishal. He's writing to us from Dubai. And he's holding Balaji Amines at an average price of 3,423 rupees per share. He's incurring quite a bit of loss on this particular holding. So he wants to know what's the long-term perspective of the stock. Should he look to continue to hold on to it, exit, or should he actually look at this opportunity as an opportunity to accumulate some more and improve his average price?
Balaji Mines is a very good company, so it can definitely be held from a long-term perspective. But he must keep in mind that the chemical stocks would be underperforming for at least almost one more year. Probably the recovery for the chemical stocks would start towards the end of FY24 or from FY25 onwards. So the stock might not perform for next 9 to 12 months. So keeping that in mind, he should take a call. From a long-term perspective, it's a very solid, fundamentally strong company, and definitely he can look to average at this levels.
Company for the longer term. Kunal, you have a specific level because Sneha is of the view you can look to accumulate right now.
See, I was actually looking at the retracements for Balaji Amines, and I think COVID low, the stock was almost at 200. From there, the stock made a high of 4,300. So after such a kind of a steep rally, there's bound to be some major correction which happens into the stock price. In terms of levels, the 68% retracement, which we typically look out for, is closer to 1,875. So my sense is that in case if you're looking out to average, closer to that 1900 marks, maybe 1950, 1900 levels could be a very good zone where we need to start averaging the stock.
Okay, so that's the outlook on Balaji Amines. But with this fears, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me address the flashes on the bottom of your screen. Let's pull up the stocks like Kohinoor Foods, KRBL. We need to see if they are directly impacted by the move. But what sources are telling wire agencies is the fact that the government is considering banning most rice exports. This is given the fact that we are seeing a sharp rise in the domestic prices for rice. So India, remember, is the world's biggest rice shipper, and they're considering banning exports of most rice varieties. Also, government is discussing a plan to ban exports of almost all the rice varieties barring basmati. So all non-basmati rice exports is what the government is considering to ban, and this in order to bring down the domestic prices. And remember that this move, if it actually transpires, if it really happens, the likely ban will affect about 80% of India's rice exports. So this is the latest that we're picking up. Source-based story coming in on Wire Agency. The fact the government is set to consider banning export of non-basmati rice. All right, with that, let's actually continue taking your query. In fact, let's slip into the rapid fire then. And the first one is coming in from Anand and from Gurgaon. For you, Kunal, Zomato 4,000 shares at a price of 53 rupees per share. Should he look to book partial profits? And if yes, then should he move the money to REC or BOB?
Yes, you can consider booking partial profits and move the money towards Bank of Baroda.
Okay, Kunal Alma D'Souza is holding shares of HCC from a price of 21 rupees. Wants to know what are the prospects for upside for the next 6 to 1 year.
Extremely bullish on the stock. You should continue to hold on.
Okay, this one is coming from Sudha, long-term investor. Sneha wants to know between BPCL, RBL, Bank of Maharashtra, which two stocks to invest for the long term?
BPCL, and I would suggest, I would recommend not to invest in RBL and the other name. Probably from the banking small size banks, Federal Bank can be looked at.
Okay, Sneha, what's your outlook on Trent? Krish is holding 75 shares from a price of 1,685 rupees. Wants to stay invested for the next 3 years. What's your outlook?
We're extremely positive on Trend. It has been continuously delivering strong results, and even going ahead for Q1, we're expecting good numbers to be reported by the company. Given the kind of growth plans that they have, extremely bullish from next 2 to 3 years.
Okay, this one is from R. Dubey from London. BEML HG Infra worth a buy for the short term right now, Kunal?
Not really.
Okay, Kunal, what's your outlook on Titagar Wagons? Sanjay Kumar is holding shares from a price of 60 rupees, and he's also had ICICI Bank from a price of 358 rupees. 1 year target in both of these.
Hold on to both of these stocks.
Okay, Kunal, Akhil from Delhi is asking about IEX, 1,695 shares at a price of 171 rupees per share. What should he do? It's in loss for a long time. Is there any scope of recovery?
Either exit at current levels, or you can look to average maybe, but after the couple of quarters.
Okay, Kunal, Devashish is holding 200 shares of Happiest Mind from a price of 1,030 rupees. What's your outlook on this one for a medium to long term perspective?
Hold on to the stock. If possible, look to average sub the 900 mark.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Sneha, as well as Kunal, for joining us on the show, talking about the IT sector. What should one do with their IT holdings, and how should they see this particular bounce back, and also resolving queries. And with that, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Srishti, myself, and the team that put the show together. Stay tuned. Markets at noon. Up next.